Welcome to today's episode of Pharma Newsroom, your easy insights into all the biggest pharma companies in the world. We thank today's sponsor, Pharma AI Academy, your education partner for pharma.
Welcome to the Deep Dive. Today, we're going to be looking closely at Eli Lilly's first quarter financials for 2025.
That's right. We've got their official press release here, and the idea is to really dig into it from an investor's angle.
Exactly. And we'll keep an eye on how things might stack up against, their big competitor, Novo Nordisk.
For sure. So we'll unpack the key numbers, the big developments from Q1, what's driving things.
But first, the usual reminder. This is all just for information. It's definitely not financial advice.
Absolutely. Okay, so where should we start? The top line.
Yeah, let's jump in there. Revenue hit $12.73 billion in Q1. That's up, 45% year over year? Huge jump.
Huge is right, and the report points squarely at volume increases for that.
Mostly Mounjaro and Zepbound driving that volume, I assume.
Overwhelmingly, yes. They're really carrying the growth right now. Those two are clearly the stars.
Okay, we'll definitely circle back to those specific products. But the report mentions some things holding it back a bit. Lower prices, foreign exchange.
Yeah, exactly. Lower realized prices and unfavorable FX rates did offset some of that volume gain.
So for an investor, what does that signal? Strong demand, but maybe some pricing pressure or strategy involved.
I think that's fair. Strong underlying demand, no question. But the lower prices could mean, competition heating up or maybe entry pricing in new markets. And FX, well, that's always a factor for global companies, isn't it?
Right. A reminder that external factors play a role. Okay, let's talk profit. EPS looked pretty healthy, too. Reported EPS up 23%. Non-GAAP up 29%.
Correct. Reported came in at $3.06, non-GAAP at $3.34. But there's a key point here.
The IPR&D charges, they were included in those numbers, right?
Yeah.
$1.72 a share.
Exactly. Acquired in-process R&D. It's the cost of buying research projects, basically.
So the fact that EPS grew that much, even with those charges, is pretty significant.
It really is. It suggests the core business, the current products, are generating really strong profits, enough to fund these big bets on the future through acquisitions. That's a good sign for investors balancing current returns and future growth.
Okay, good context. Now let's get into those key products. Mounjaro first. Global revenue up 113% to $3.84 billion. Wow.
Just phenomenal growth. Really shows the market uptake.
And the split. U.S. versus international.
U.S. growth was strong, 75% to $2.66 billion. But interestingly, the growth outside the U.S. was huge too, hitting $1.19 billion. That includes breaking into new markets.
So strong demand pretty much everywhere it's available.
Seems like it. It's making serious inroads in that GLP-1 space where, Novo Nordisk has been dominant. The competition is definitely intense.
And again, that growth number would have been even higher without those lower realized prices you mentioned.
That's the note in the report, yes. Selling a lot, but
Yeah.
maybe not at the prices they saw initially or hoped for everywhere.
Okay, now Zepbound. A new product, right?
Mm-hmm.
But the jump is massive. $2.31 billion in the U.S. this quarter compared to about $500 million same time last year.
Yeah, $517 million last year. It's an incredible ramp up.
Investor takeaway there. Huge market need. Lilly's capturing it fast.
I think so. It signals, a product that really hit the mark in terms of unmet need. And achieving that revenue so quickly after launch suggests a very long potential runway.
But the same caveat applies. Lower realized prices impacting the total.
Yes, the report mentions that for Zepbound, too. Demand is the main story, but pricing is a factor investors need to watch.
Got it. Now, it's not all about Mounjaro and Zepbound. Verzenio, for example. More modest growth, 10% globally to $1.16 billion.
Right, a more mature product. The U.S. growth was only 3%, actually. Report mentions buying patterns and competition playing a role there.
But stronger growth outside the U.S.
Yeah, 22% growth outside the U.S., driven by volume. Though, again, FX took a bit of a bite out of that.
So it shows the importance of looking at the whole portfolio in different regions, doesn't it?
Absolutely. And the report lists out those key products, includes things like Eblis, Jaypirca, Omvo, alongside the big ones.
And there was that note about Jardiance, a $370 million one-time benefit.
Yes, from an amended agreement with Boehringer Ingelheim on commercialization.
So investors should probably mentally set that aside when thinking about ongoing performance.
Exactly. It's good for the quarter's numbers, but it's not recurring operational revenue. You look for the sustainable trends underneath.
Okay, shifting to expenses. Gross margin looked good, up 48% to $10.5 billion, and the margin percentage increased to 82.5%.
Right, that's positive. Driven by better production costs and a favorable product mix, meaning more sales of those higher margin drugs like Mounjaro and Zepbound.
Partially offset by those lower prices again, though.
Correct, but still, a strong gross margin shows good profitability on the actual sales.
What about R&D? Up 8% to $2.73 billion. That's over 21% of revenue.
Yeah, a significant investment. But you expect that, right? In pharma, the pipeline is everything for long-term growth, especially when you're competing head-to-head with giants like Novo.
So investors likely see this positively, fueling the future.
Generally, yes. It shows commitment to innovation, and they highlighted things like Orforglipron, that oral GLP-1. That could be a huge deal.
An oral option would be a game changer for convenience, wouldn't it?
Potentially, yes. A big competitive factor against injectables.
Marketing and admin costs also jumped. 26% increase to $2.47 billion.
Makes sense. You launch huge drugs like Zepbound, you need to spend big to support them, educate doctors, reach patients. It's the cost of building that market share.
Now, the really big expense item jump was that acquired IPR&D, $1.57 billion, mostly from buying Scorpion Therapeutics. That's way up from last year.
A massive jump, yeah. Last year was about $110 million.
So this is strategy, right? Buying innovation instead of only developing it internally.
Precisely. It's a way to accelerate getting potentially breakthrough therapies into their pipeline. It hits the current bottom line, obviously.
But investors have to weigh that immediate hit against the potential future payoff from those acquired assets.
Exactly. It's a standard playbook in pharma, especially in highly competitive areas. You need to keep feeding the pipeline one way or another.
And all this impacted the tax rate, right? It went up to 20.2%.
Yeah, largely because that big IPR&D charge wasn't deductible for tax purposes.
So less net income flows through to shareholders because of that higher tax bite.
Yeah.
Another factor for investors.
Yep. It all feeds into the final EPS number.
Okay, let's talk pipeline highlights. You mentioned Orforglipron, the oral GLP-1. Positive phase 3 results in type 2 diabetes. That feels big.
It really does. An effective oral option. That could significantly reshape the treatment landscape. And Lilly mentioned this is just the first of several trials for it, including in obesity.
So directly challenging competitors on convenience.
Potentially a major advantage for certain patients, yes. Novo and others are working on orals too, of course, but this is a key development for Lilly.
Also saw news on Jaypirca. Positive recommendation in the EU for CLL and then approved.
Right. Good news for expanding their oncology footprint. Getting drugs approved in major markets like the EU is always a positive step. Validates the pipeline.
And a few other mentions. Lepodisiran, brucitinib for alopecia, Ebglyss, Omvo. There's like a lot going on across different areas.
Yeah, that diversity is key. Reduces reliance on just one or two blockbusters, which is, a healthier place to be long term.
On the supply side, they're planning to more than double their U.S. manufacturing investment since 2020. Over $50 billion. That's enormous.
It's a huge commitment. But it signals massive confidence in future demand, especially for the GLP-1s.
And maybe trying to get ahead of potential supply issues. We've seen competitors struggle with that.
Absolutely. Manufacturing capacity is critical right now. If you can't make enough, the sales growth hits a ceiling. So investing heavily here could be a major strategic advantage long term. It's a direct response to the demand they're seeing and anticipating.
Also interesting were the moves on access expanding Lilly Direct for Alzheimer's, new Zepbound vial options with potential savings.
Yeah, making it easier for patients to get and afford the drugs. Lilly Direct aims to streamline things, and the new vial options, especially for self-pay patients, address that affordability piece, which is often a barrier.
Okay, let's wrap up with the financial guidance for the rest of 2025. They kept the revenue target the same, $58 to $61 billion.
They did. Reaffirmed revenue guidance. That's pretty significant given all the spending and the IPR&D charges we talked about.
Shows confidence that the sales momentum will continue.
It suggests that, yes. They did adjust some other lines. Other income guidance went down a bit due to investment losses, and the estimated tax rate went up to about 17%. And
that flows through to the EPS guidance.
Right. The updated EPS guidance reflects those adjustments and the Q1 IPR&D charge. The new range is $20.17 to $21.67 reported, and $20.78 to $22.28 non-GAAP. Still very strong profitability expected for the year.
So let's try and synthesize this from that investor viewpoint, especially thinking about Novo Nordisk in the background. Key takeaways.
Well, first, the incredible growth driven by Mounjaro and Zepbound. That's the headline. It shows they are competing very effectively in this massive GLP-1 market.
Second, the commitment to the future. Big R&D spend, the IPR&D acquisitions, pipeline progress like Orforglipron.
Exactly. Investing heavily to sustain growth and potentially leapfrog competitors, maybe with that oral option. Third, the massive manufacturing investment. That's crucial for meeting demand and could be a key differentiator if supply stays tight across the industry.
Oh, and finally, the reaffirmed revenue guidance suggests underlying confidence despite some increased costs and charges.
Right. It paints a picture of a company firing on, well, maybe not all cylinders given the pricing points, but certainly firing on the most important ones right now, volume growth and pipeline investment. They are clearly all in on winning in these key therapeutic areas.
So very strong quarter overall, setting a dynamic stage for the rest of the year in a highly competitive field.
Definitely. Lots of momentum, significant investment, and clear strategic focus.
Okay, and just one more time for everyone listening. Remember, this analysis is purely for informational purposes, based on Lilly's Q1 results. It is not financial advice. Please do your own research and talk to a professional.
And hey, if you found this useful and want to support us, or if you're in the pharma world and interested in AI applications, check out Pharma A Academy on YouTube. Please subscribe. It really helps us out.
Absolutely. And maybe a final thought to leave you with. Considering how fast things are moving with GLP-1s and other areas Lilly is in, what do you think the biggest long-term impact will be? On patients, yes, but also on how the whole pharma industry operates. Something to chew on.